Hello, everybody, and welcome to an emergency edition of Hash Rate. My name is Mark Jeffrey. Emergency! And my guest today is Fred Krueger. But first, a shout out to MEXC, who I think is still solvent. Use my code in the YouTube show notes and sign up. And remember, even on MEXC, bring your coins home every time. Don't leave them up on a centralized exchange. Bring them home into a ledger or a Trezor. Tough lesson for a lot of people this week. So just thought I'd remind everyone. So hello, Fred, and welcome to the Emergency Hash Rate. How you doing?
It's good to be here on the emergency edition of this very important podcast.
Yeah, so for all those of you who don't know Fred, he used to be kind of a big deal on Wall Street before he became kind of a big deal as a tech entrepreneur. So he's got sort of a pretty interesting mix of background and skills that he can share with us today. And we're going to go over the whole SBF FTX thing. So,
I was, just as a little piece of information, I was kind of, when I was a little younger than SBF, I was kind of an SBF on Wall Street. It was a bunch of quants also from places like Stanford and MIT. And we were, doing all kinds of very, very similar things in a way to what this newer generation kind of did, and we also got into a lot of trouble. So,
yeah, much like you, SBF or Sam Bankman-Fried, he started life working for another firm. So he was actually working for a hedge fund, and he decided, well, I can do this better myself, and I can do it in crypto probably better. So he pulled away and started his own hedge fund called Alameda, and that's sort of the beginning of this whole thing. And I guess that was like, 2015 or 2016, something like that. And
I think 2017. 17.
No, that was when FTX was started. So I think he had Alameda before that.
I think 2017 was Alameda, 2019 was FTX.
Oh, you're right. You're correct. Those are the dates. Okay, sorry about that. My mistake. So 2017 he starts Alameda as a hedge fund. And initially he does super well, right? Because if you know what you're doing, even simple things like arbitrage between exchanges, you could actually make a lot of money if you just knew what you were doing there. And so, as a pro, he came into this sort of space of amateurs, and for the first couple of years did really well. And then the profits started drying up, right, as more professionals moved into the space. And so he said, well, I need a second act. What do I do? And he realized, hey, I'll start FTX. I'll start my own exchange to compete with Binance and Coinbase and all these other things. And I'll use Alameda, the hedge fund, as a market maker for FTX. So that was sort of the initial setup. So you have all this money flowing into FTX and market making coming from Alameda, right? So far, so good, Fred? You agree?
Yeah, so I think it's not clear right now. Look, I'm not an expert in this area. I mean, we're all just kind of trying to put the pieces together.
Yeah.
So I'm just another observer. Been in crypto for a long time now and just looking at this stuff, but it wasn't 100% clear what he was doing at Alameda, how successful he was really. None of this is clear at this point. So, was he really doing arbitrage? Not clear.
We don't know. Yeah, no, you're absolutely right. This is all sort of, we're all guessing. Yeah, we're all sort of reading things online and trying to piece together what happened when, and none of us are on the inside, so we don't really know. So anyway.
One thing that's clear is that he was heavily involved in kind of perpetuals. Perpetuals are a very unique product that was developed by Arthur Hayes at BitMEX.
It's unique to crypto. So this doesn't exist on Wall Street, right? The perpetual futures instrument. Yeah, that actually that confused me a lot at first. I was like, what is this thing? I remember me calling you up and asking you about it. I finally figured it out. But yeah, it was sort of mysterious at first.
So it's on Wall Street there is margin trading, right? So you can buy things on margin. Now, typically you can't really get more than 10 times leverage on anything. On these, Arthur Hayes at BitMEX invented this new security, really, I call it a security, a contract, that basically says, I will give you 100 times leverage Now, you could put up some money. Let's say you put up $10,000, and you can trade a position size of $1 million with $10,000. Well, it doesn't take a very big movement for you to double your money or lose all your money
Right.
on that, right? Because you're doing 100 to 1. So if it moves 1%, you're either going to move double your money or you're going to lose all your money.
Right. Yeah, that was. I remember that was on BitMEX, and I remember
Yeah.
when the cascading liquidations came that wiped Bitcoin's value down every time it originated out of BitMEX because of cascading liquidations from these instruments. That's what I observed.
Right, and so the point is that it really was a new instrument because in finance on like if you look at the the sort of the traditional futures exchange, etc., you're liable, right? So if you don't pay up your margin call, they can come after you and they can say, "Excuse me, Mark, you bought a bunch of these things on margin and you didn't quite meet the margin things. Well, you need to pay up, or we're going to take your house."
Right.
You know.
Well, you don't have to secure the collateral with those margin calls, right? In crypto, you actually have to put up the collateral up front. It's crypto.
You do, right? But there is a recourse, right? So you do put up the collateral, just like in crypto, in TradFi.
Yeah.
Except you are on the hook for these. You're on the hook beyond just your collateral. The crypto thing is unique in that you're really not on the hook for anything, even contractually, right?
Right. Well, so basically, and I think it was you who told me about this. So if the asset that you have leveraged crashes fast enough, it may crash below your collateralization before they can liquidate it, and that is unique to crypto, I guess, because crypto is the only thing where you have that sort of upfront collateralization. So it is possible for the exchange to wind up underwater. In fact, severely so, because with these instruments in a way that a regular firm cannot. Correct?
Correct. And look, I mean, there was a point, going later in the FTX collapse where Bitcoin moved from 30,000 to 20,000 almost overnight.
Yeah.
So you can just imagine all these people who were kind of long, Bitcoin 10 to 1, 100 to 1, etc.
Right.
On FTX. FTX must have lost a ton of money on that.
Yeah, I mean, not to even mention Luna.
Right.
Because that move was insanely severe, right? So,
right. So
for sure.
These instruments are really, truly financial weapons of mass destruction, right?
Yeah.
They can be used, they can work great, but they can cause a lot of pain for you, and they can cause a lot of pain for the exchange that offers these instruments as well.
Okay. So as a result of the success, we don't know whether it's manufactured or not, of Alameda Research, the hedge fund arm, FTX is founded, and FTX is sort of an instant hit. And based on that, Sequoia invests $200 million. I think it was $200 million ultimately that they ended up investing in him. I've heard different reports. I've heard $150 million. I've heard $200. And then proceeds to write a super, super puffy puff piece on the Sequoia website, which they have now scrubbed. But just a little bit, I managed to get a few screenshots. So suddenly the chat window on Sequoia's side of the Zoom lights up with partners freaking out. "I love this founder," types one partner in all caps. "I am a 10 out of 10, pinged another. "Yes," exclaimed a third. And then in another part of the puff piece, after my interview with SBF, I was convinced I was talking to a future trillionaire. Whatever mojo he had worked on the partners at Sequoia, who fell for him after one Zoom, had worked on me too. For me, it was simply a gut feeling. So, Sequoia, whatever's going on here, Sequoia, they're not idiots. I mean, it's fun to make fun of them now, but they're not stupid people, right? So whatever this was, they fell for it. And then as a result of that, weirdly, I should mention here, A16Z steers clear of this same thing that Sequoia invested in, right? So A16Z, Andreessen Horowitz, invested early in crypto and reaped massive rewards. And then so they got in at the right time, and they also stayed away from radioactive things like this, which is interesting. I don't know how they avoided this, but they did. So they were not in this SBF FTX deal, and so did Elon. Elon also did not accept Sam's money.
Meter went red.
Yeah. So somehow those two parties saw through him, where Sequoia did not, for whatever reason. And then after this, SBF becomes the largest donor to the Democratic Party, other than Soros, and he put $40 million into this last election cycle. And over time, if you include the Biden run and everything in between, it was about $200 million that he put into the Democratic Party. Now, this is interesting because his mom runs a major Democratic political action committee, and his dad is a professor at Stanford who apparently helped Elizabeth Warren craft tax code, which, right? And so, and then, right, this is crazy. And then also, I remember about 6 months ago, I saw SBF posting on Twitter pictures of himself with Clinton and Blair on stage, Bill Clinton, and this was at SBF's Bahamas crypto conference. I had never seen those kind of people at a crypto conference before, so that was like kind of exciting, but also sort of worrying. It was kind of weird, right, at the same time. Yeah. So I saw that, and then the World Economic Forum featured SBF and FTX on their site, which, again, they have since scrubbed, and I will show a graphic of it here in this video because I captured a screen grab of it. So this guy is Mr. Current Thing. He is Connected City. He's not like a scruffy rebel from the woods like he looks like, right? That's not who he is. So I don't think we've had a more connected person in crypto. Can you think of anyone?
Well, he's connected in the sense that he's throwing money around. And that connects you pretty quickly in Washington, right?
But his parents are, Stanford, Political Action Committee, and his partner, and here's the other thing I forgot to say. So his business partner at Alameda Research, Caroline, her dad was Gary Gensler's boss at MIT when Gensler was a professor. So not just money, right?
I don't know. Like, I'm going to push back because I think...
Okay.
So I know there's a lot of people out there who I respect and are coming up with all kinds of crazy conspiracy theories. And, this is all connected to the Democrats and Soros and everything else. And here's the thing. The reality is, I think, a lot of this, if you look back at kind of really all these things, they're all kind of happening this year. They're 2022 things, right?
Yeah.
Really, it's kind of like when he gave the money, et cetera, right? And so I think there was an intent for him to sort of infiltrate the establishment. There's clearly this intent. Did he really? Did he get preferential treatment? I'm not sure he did, really, to be honest.
Okay.
I think had this thing continued another 2 years, yes, he would have absolutely cemented his claws in sort of the establishment. But I just don't. I think this happened. His rise and fall happened pretty quickly.
Well, so counter argument to what you just said. So you and I both looked at FTX when it, right around when it first came out, or after it was starting to rise up, and I think both of us thought it was pretty good, right? As far as an exchange went, it had a really great user interface. Some of the products were really interesting. I remember I would talk to you about the Bitcoin long 3X coin. You could just buy that as a coin, right? It was kind of interesting. They also had synthetic stocks. So they had synthetic Tesla, they had synthetic Apple, and you could just go buy coins that were pegged to those stocks.
Yeah.
Gary Gensler didn't seem to care about that, right? And meanwhile, he seemed to care about Library and Kim Kardashian.
Yeah. Well, it's the
so I hear that.
Thing, right? This Library thing. Was, I think a 2016 kind of ICO or something, right? So it's unclear, right? It's unclear if there was really, I just don't know. I don't.
Well, let's put it this way: we know that stocks are most definitely in the purview of Gary Gensler. Synthetic Apple stock, synthetic Tesla stock, that is definitely him. I don't think anybody in their right mind would argue against that. and yet there appears, and we don't know, but there appears to be no action.
Well, it's clear that Mr. Gensler was not doing his job properly, right? Because here we have the biggest consumer loss ever, right?
Yeah.
But it's not only it is overseas, but they also have FTX US declared bankruptcy, right? So a lot of Americans lost a lot of money in this, right? Including Tom Brady, Giselle, Stephen Curry, Mr. Wonderful, So, we've got a host of famous people who've lost money in this. I have not lost any money in FTX.
Yeah, I haven't either. I never.
But actually, I do have some money in the Ledger X, which is owned by them, which is not declared bankruptcy, believe it or not.
That is interesting.
And it's operating just as normal. So it's one of the ones that did not declare bankruptcy.
Interesting. I haven't looked into that one yet.
Yeah.
But I want to read you a letter, and I'm pretty sure this is a real letter. I don't think it's a fake letter. I haven't seen it refuted, but I'm not sure. I'm not quite sure where it came from, but I do think it's real. It's from 4/29/22 from Amanda Fisher, and it says on March 23rd, 2022, members of the staff of Chair Gensler met with the staff of IEX and FTX to discuss custody of digital asset securities by special purpose broker-dealers, including the unique risks associated with the custody of digital asset securities and the conditional no action relief discussed in the statement. So it appears that there was a discussion underway with FTX, with the SEC, that they were going to give FTX a no action letter, which means that they would not be prosecuted for any sort of securities-related infractions.
Here's the most amazing thing about this, right? Forget all these little ICOs that happen, right?
Yep.
FTX itself was involved in, you look at the number of tokens, I think they call them SAM coins, like this MAPS, the Serum, there was a bunch of these things. And, Serum is the one that the Wall Street Journal wrote about extensively, and, this thing is something where, it was fabricated out of thin air. They leveraged it. They promoted it. If this thing is not a security, then I don't know what is. You know what I mean? Like, to me, you have this guy who's kind of in this business of kind of making tokens and blessing them and promoting them and selling them to the general public. That's his kind of core business. It's, the exchange almost doesn't seem, it's not clear that he was making money on the exchange. The fees were very low, Like, it's almost like the exchange was a lost leader to get him just this volume that he could make money elsewhere, by either liquidating his own clients, outright stealing money from the clients, just doing a bunch of extremely shady things. But it wasn't on the margins. It doesn't appear that he made money just by taking a cut. The fees were just minuscule, right?
Yep. Okay. All right, so let's move on because I want to move on. This is sort of the middle part of the story now. Right. So about 2 weeks ago, there was this big debate that that happened in video between Eric Voorhees and Sam Bankman-Fried. It had things sort of in crypto. It had sort of the character of the Lincoln Douglas debates, in that you had these two figures that were had very strong points of view and were very opposites. I would say, however, that Voorhees was kind of like the Daniel Webster. He was very, very great at oration, and Sam was kind of mumble-mouthed and not great. But he was the guy who was, he was the gladiator in the arena who was actually talking to the regulators. So we thought, and still might have been true. Hard to tell. And basically, what was going on was Sam was arguing that we as an industry would have to give up KYC on DeFi in order to prevent the regulators from declaring that they wanted KYC on blockchain validators, which would have probably killed a lot of chains and just made running them impossible. And Sam's argument was like, well, they need blood from somewhere, and probably DeFi is a middle ground. If we give it to them there, then they won't come after all this other stuff. And Voorhees was very much like, no, we have to stand our ground. We cannot allow them any ground at all on KYC. And it struck me, my sort of personal view on it was that Sam was the more practical and the more ambassador, I don't know what the right word is. He was the guy that was going to actually negotiate effectively and make concessions that were smaller than what we would. If he tried to do what Voorhees wanted him to do, we would have ended up with nothing. And Sam was the guy who was going to find the middle ground. So I kind of said,
yeah. I mean, it's interesting because a lot of people took at that debate and they kind of took your position to it. They sort of saying,
yeah,
Sam was more the adult in the room, and
weirdly, yeah,
and et cetera. So. And Voorhees kind of came across as like a little bit of a, libertarian freak, a little bit like, okay, you want this stuff, but surely you can't, surely we can't have, a completely deregulated environment, right? Surely we can't have that, right?
Right.
So, I think as you look back at it, when I first saw it, I sort of felt a little bit like you. I agreed with you in that, I was sort of like, well, okay. I understand your perspective on this, but then, then looking back on it now, it's sort of, I actually feel like looking back on it, I actually feel more sympathetic to Voorhees.
I feel the same way. And for a couple different reasons. One is, now we didn't have that Gensler letter, which and all this other knowledge about everything else that was going on, and at the risk of sounding conspiratorial, it does appear to me that Gensler and sort of the powers that be that want to cage crypto in some way were setting Sam up as their guy, right. and Sam and FTX was going to be the centralized choke point for all of crypto. And they would, that's how they would control whether, what would live and what would die. And it would also at the same time marginalize CZ and Binance. It would basically make everything CZ was doing illegal in the United States, which would crush him, maybe out of existence. So kill two birds with one stone. And so it now appears in retrospect that Sam was arguing, for his own elevation as kingmaker, as the sole survivor in the regulatory environment that was about to become reality. Instead, the opposite happened. SBF is dead, FTX is dead, and CZ is and Binance are the sole survivor and winner of this whole thing. So, yeah. So I kind of look at it now, and I'm kind of like, well, now that I know what you're up to, I feel where Voorhees is coming from. That said, I do feel that, and I think you disagree with me on this, but I feel like, I put out a tweet about what I think of the future version of a DEX would look like, and it included KYC, which I'm kind of like, well, on an exchange, KYC, we do this for centralized exchanges anyway, so requiring them on DEXs I don't think is a big deal. However, on other DeFi instruments deeper in the stack, other DeFi Lego bricks, lending, that sort of thing, we should not require KYC because we want to be able to stack these Lego bricks with software, and introducing a KYC layer on top of every Lego brick would kill kind of the composability of DeFi. So what do you think about that?
So I think that the decentralization is critical here, right? I think the beauty of DeFi is that it is decentralized. The word decentralized in there, and that it can't be. There's no shut off switch. You can access the thing wherever you are. Nobody can say, "Oh, I'm sorry, your country is now on a blacklist," right? Or you personally are on some kind of blacklist, or And so that's the problem. The problem is who's controlling the keys, who's controlling the gates. And it sounds so innocent to say, well, we're doing KYC. We're checking it. Okay. So, let's go beyond that. Are you now saying that people from Iran can no longer access your thing? Because all of a sudden it's on some kind of OFAC list. Well, maybe, and maybe, we have to have a user interface, sort of, if you're running that user interface, you can't run it including people from Iran, So I think the key thing is to have different user interfaces, different pathways, different front ends. As long as you have different front ends, some of them may require KYC, some of them may not. The U.S. can't regulate all things. They can't regulate all clients of all blockchains. They can't. So when you say this is the future, it may be the future. There may be some front ends that do KYC. There may be other ones that don't. I think it's very hard to say the only ones that are going to be survive are the ones that do KYC. I think that's not clear.
Right. Okay. Well, we shall see where this all goes. Yeah. So I was just going to say, after the whole Lincoln Douglas debate thing, Sam Bankman-Fried followed me on Twitter, which was kind of cool, right? And he's still following me now, even though I'm sort of shit talking about stuff he's up to. So, and I know he's unfollowing some people, but Sam, if you're listening, I just want to say to you, you were the chosen one. You were supposed to bring balance to the DeFi. Anyway, that's my speech this year.
The real question is, what is the shape of all this stuff? 6 months from now, a year from now, 2 years from now. And is it similar to what we have now with these big, entities run by individuals or VCs or groups of VCs and that do, some KYCing, but they do a whole lot, they take a whole lot of liberties with everybody's positions. And, I'm sort of thinking that maybe we're kind of at the end of that. You know what I mean? Like we could have a much bigger movement towards DEXs. So I'll agree with you there. I think that, we're going to see more DEXs, more things like Uniswap, more AMMs, and sort of less things that look like FTX or Binance. That's kind of my gut feel is we're going to see more truly decentralized contracts and with different front ends, So I think that's very clear that that's the direction we're gonna be going, and unless kind of this last iteration, because who's going to trust something like FTX right now? Not me,
Yeah, it's hard to say. I mean, we can't see inside of any of these centralized exchanges. We have no idea. I mean, Binance could be about to blow up for all we know. We have no idea.
Right now. Like, maybe they're solid. They could very well be solid, but we have zero transparency. We have zero transparency, and in many ways, they're doing a lot of the same kind of things that FTX did. Futures, paid listings, all this kind of stuff. They're in roughly the same business that FTX is in.
Right, but they may be managing the risk much better. So let's talk now about how FTX died, because we haven't done that bit yet. Okay. Yeah. So, and this would probably inform the discussion on Binance. So my understanding of the events goes something like this. So Alameda, the hedge fund, lost a bunch of money on the Luna crash, and that just decimated them. And oddly, Sam tweeted out at the time, many exchanges are secretly insolvent. Little did we know who he was talking about in part. And now this is where Sam crosses the blood-brain barrier and covers it up with a loan from FTX to Alameda. Now, it took the form of, he basically took FTT, and I don't know which side he did this on, but he took FTT, which was the token for FTX, used it as collateral to get a DeFi loan in stablecoins, which was then transferred to Alameda, or they did that inside of Alameda, I'm not sure which. But basically, the FTT was securing assets of consumers, of users that were stored in FTX. So now that's where the blood-brain barrier got crossed, where he's using consumer money for his own gambling, bottom line. So to cover his bad gambling.
Well, not only that, but all this is happening while they're buying the naming rights to the studio, while they're entering into some new leases in a brand new building in Miami. I mean, they're spending money lavishly while at the same time going into users' accounts and taking money.
Right, which is crazy. But this is not a crypto thing. None of this is crypto. This is just a bank behaving badly, right? I don't actually see a crypto crime here. I see a bank crime. Is that what you see?
Oh, banks are regulated. Look, banks go bust all the time, right?
Right.
But banks are regulated, and there's bank examiners, and they have these stress tests and everything else. This is not a bank. This is not. There's no regulator that's like.
Okay, so you don't think it is a bank crime? You think it's something else?
What?
You do not think it is a bank crime?
Well, I just think it's we're in this unregulated. FTX was not regulated in the same way a bank is regulated.
True.
And so whether that regulation works or not. I mean, there's plenty of banks that did absolutely terrible, and they were all regulated in 2008, and they all went bust, right? Lehman Brothers was heavily regulated, right?
Yeah.
Didn't help Lehman Brothers. Bear Stearns was heavily regulated, right? Didn't help, right? They still, AIG was like, massively regulated, insurance company. So the real question is, does regulation even help?
Right.
I think we have a pretty good example of many cases where regulation does not help, right? Like, and the 2008 debacle really shows this, right? Like, so many of these banks just, with the home crisis of 2008, so many of these banks just didn't matter if there was regulated. Doesn't matter. They still go bust.
Right.
So, in this sense, it's not unique, except, it's just another example of financial misconduct. And this is why crypto, meaning, Bitcoin in particular, but, I'll throw in truly decentralized chains like Ethereum in there too, right? Yeah. Well, they have a future because they don't need to depend on these actors, right? So the entire reason Bitcoin was invented is to avoid having to deal with the Sam Bankman-Frieds of this world, right? So ironically, here we are 14 years after the creation of Bitcoin. And what happens? Well, it's not Chancellor on the brink of banks. It's Sam Bankman-Fried causes this $10 billion hole by mismanaging people's crypto, right? So it's incredibly ironic that, we're just, even though we've invented all this stuff, users are still basically going back to the old thing. They're using centralized exchanges. They're allowing the same kind of bad behavior that banks did. And, we've learned nothing.
Right.
Except, if you have your coins in cold storage, you're immune. You don't care. It doesn't matter.
Right. Well, you get the fallout. You get the fallout from this shit, depressing the price of Bitcoin. So you're affected in that way. But other than that, you're not directly affected. You're not going to lose anything.
Right. Well, it may be a temporary thing too. This whole thing almost has nothing to do with Satoshi. Satoshi did not create this for this stuff to happen, right?
No, he created it as the antidote to the 2008 situation.
The other crazy thing is, and Caitlin Long posted this thing in a video recently. She said, "Look, 25% of the people on FTX were trading with 125% leverage, 125 times leverage. Okay, so they had $2 billion.
Yeah.
$2 billion of their client money was over 100 times leverage. So that would be we're talking about $200 billion of notional amount, right?
Right.
So these people are just taking this insane amount of risk, right? Insane in both directions, up and down, just crazy, right?
Yep.
So what does this have to do with self-sovereign peer-to-peer cash? Nothing, right? This is just like, it has nothing to do. It has nothing to do with like any of these things. It's just basically a bunch of speculators who are speculating on where the price of Bitcoin will be in 10 minutes, right?
Right.
That's it. So it's just like this gigantic casino that these guys have created. And it's almost surrealistic. It almost makes...
It's kind of cartoonish.
What?
Yeah, I agree.
And they're not really facilitating capital markets or, you could argue that, in kind of my time on Wall Street, we were facilitating issuance of bonds and different, capital markets things and creation of the mortgage-backed securities, which enable people to get houses, without that, people wouldn't have.
Right.
So there was some benefit, but this speculation has no benefit. Like you can argue that what benefit did FTX do to crypto? Nothing.
Right.
It's just basically a speculative house.
Okay.
So what?
So let's close in on the end here because we're running out of time.
Yeah.
So look, Sam lost $10 billion. So a $10 billion hole. Luna was like an $80 billion hole. So Luna, in my mind, is a lot worse. Plus, there was all the contagion events that happened after Luna. So 3AC, blah, blah, blah. And actually, we just found out now FTX. Right, so that hole was much, much, much larger. So call it 10x, probably. More than 10x, but 10x. But this one feels worse, right? Like I don't know why, but this one feels like a worse crisis. How bad is it, and is that an illusion?
Well, first of all, you have to look at all the. $10 billion is the amount of money that they lost.
$10 billion, but yes.
If you look at the market cap drop of Solana and all the other tokens and the impact that they've had, I would say it's probably worse than Luna, right? So
really,
Luna, it's not even clear. Luna went up, went down, right? But how much money was actually parked in UST? There was 10 billion that was parked in UST, 10. So it was about the same, right? The price of Luna, the market cap of Luna went up, went down, doesn't matter. Not a lot of people lost money there. So they lost money by putting money in UST thinking they were going to get 20%, and they didn't. Right? So it's about the same order of magnitude as Luna.
Interesting. Okay.
It's a $10 billion issue. It's just more recent, but it's a $10 billion hit. But yeah, it does feel worse because
feels worse.
I think that here's the difference. The difference is Luna. You could kind of argue that there wasn't any malice involved, right? Mm-hmm. It doesn't. You could sort of say he designed an imperfect thing, but did he deliberately steal from people? Not clear. You know what I mean? It feels to me like he just built a bad mousetrap that just...
It feels like no. I agree with you. That is what it feels like.
That blew up. But it's not like... Here, it's not a bad mousetrap. It's just like you went into
bad
the
human.
Jar. You went into the cookie jar. You took billions of dollars. You bought stadium rights, and you gave some to your favorite politicians. And you bought jets and penthouses. This is not good, right? So...
Yeah.
Just from an ethical standpoint, this thing is just so repulsive. What happened? That I think is the fundamental difference, right?
Got it. No, I agree with you. That sounds right. So let's talk now about
that's the thing is we got to be better we got to be more ethics has to come back, and I think if you go back to the Voorhees versus Sam talk, Voorhees was a principled, ethical position. You may not agree with it, but he wasn't trying to shill something. He wasn't trying to make money. He was just like, this is the right way to do it.
Yep. I find Voorhees extremely impressive.
Sam's stuff is everything he said was suspicious.
Yep. Yeah, even more so now. That whole debate's just got a whole new color to it.
Right.
So
and saying he's doing it for charity, also highly suspicious, right?
Right.
So
right.
I don't know. I feel like it's we all feel like it's been we've been screwed by somebody, and
we've been had.
We've been had, and it wasn't just like we made a bad bet on some technology. No, this is like a con man. This is like Bernie Madoff,
Yep.
This is the Bernie Madoff moment, and so.
Yeah, we trusted this guy.
I think we need to and I think if you compare it to Bitcoin, where, it was exactly the opposite. Satoshi created massive amount of wealth and didn't take a single coin, right? And really, there's all these things that are, I could argue that these have really big human rights, implications. Like they're really great for authoritarian countries and moving money and potentially getting, rid of the oppression of these governments and long term of, fighting inflation and everything else, right? Like true hard money that nobody controls. Fantastic concept, right?
Yeah, no, totally agree.
That's really
so okay,
good.
so now Sam.
Really,
so now at this point,
Sam is just the worst.
Yeah. Okay. So this point, Sam, so up to the present now, Sam is in the Bahamas still. It appears he is unarrested, and there's been two big articles that have come out about him. One in the New York Times, which they never use the word fraud once. They never compare it to Enron, and it's pretty much a puff piece. And even Elon was like, "Why the puff piece?" New York Times.
It was outrageous.
It was. I mean, it was, and then the Financial Times, FT, wrote a piece where weirdly they suggested that CZ was the villain for tipping over FTX by selling all of his FTT coins once he learned of all the the Alameda horseplay there. So why this coddling? Why these puff pieces? Why is the media not just killing him?
I don't know. I mean, I think you would think that he would be more of a villain than what he is.
The media loves blood, and there's it's gushing from the elevators. It's The Shining, and they're just going, oh well, whatever, They don't care, and it's really weird.
It is weird, and it's almost like they were paid to write.
Right. That is what it feels like.
It really feels like somebody got some money under the table, like make the article good,
Right.
Here's an envelope,
Okay.
It's I don't want to accuse anything of anything, but it is compared to the outrage in the crypto community. It's just unbelievable.
If this were Travis Kalanick, I can guarantee you we'd be seeing very different articles, no question.
I mean he had that one incident in the Uber with the driver.
Yeah.
Then it's like, how dare you? You insulted the driver.
Right. It wasn't good. It wasn't a good moment for Travis. I mean, even Travis would agree with that. So, but
it was
compared to this, it was nothing.
This was nothing. It was crazy.
Yeah.
And the ironic thing is, I don't think Sam is likable. It's not like he's so likable. It's like I really feel bad. No, he's an extremely unlikable person.
I think he was likable before we knew who he was. I didn't dislike him. I mean, I could be. I mean, look, I've been watching the guy closely for about 3 weeks now. I kind of knew who he was, but I wasn't really paying that much attention until this Voorhees debate, and then I wrote this big long tweet stream covering it, which Voorhees and Sam both participated in, and we're arguing, continuing the arguments back and forth. And that's when I kind of got to know him, and I kind of liked what I saw. I mean, I thought he was a good guy. I didn't agree with everything,
Okay, well.
but I liked him. He was like our dude. You know what I mean? I was like, it's good that this guy's on our side. Now I feel completely different.
Right. No, it definitely, he did not, the events of the last couple of weeks have, he didn't conduct himself in a good way, you know. And I think he probably, even right now, he could come clean, right? Where's
He
the
could.
where's the 60 minutes interview, you know?
Yeah.
You know, where.
Well, what do you think happens? So this is my last question for you, Fred.
Yeah.
What happens next? Where does this go? What do you think?
Well, look, I definitely think we're going to see a trend away from centralized exchanges to decentralized exchanges. Now, the question is, what do the regulators do, right? What do they do? And it's not really clear what they can do. You know, what they should do is come really hard down on Sam and make an example of him. That's one thing they should do. Will they do that? I'm not convinced they will.
I'm not either.
Are they
He was their guy.
Are they? Yeah. Are they going to rewrite some new legislation against DeFi? Maybe. I don't know. Is it going to? If they do, is it going to have any good effect at all? No, it will not. Right. I mean, there's nothing they can do. I mean, what are they going to say? If you're running a DeFi site of any kind, you need to KYC. Okay.
Probably what they'll do.
Okay. You know. And
That'll just move it all offshore.
it already is.
Right. Well, that's a good point.
So
Yeah.
it already is offshore. So, I mean, how many U.S. companies are putting up sites in the U.S. that are DeFi sites? None. You know?
None, zero. Yeah, everybody does it offshore without a doubt.
Right. So, like, you know, what are they going to start prosecuting Chinese companies? I don't know how they can do that. You know.
Well, they can if U.S. entities, if U.S. persons participate, then they can go after them, right? So,
anyways, let me hop. It was great talking to you, Mark.
Thank you, Fred, so much for coming on.
Emergency update. See ya.
My pleasure. Thank you. Bye-bye.
Bye.